Welcome to TradeTheMBI.com. This is John. This report is for the 2nd of September. Well, the juggernaut continues, and it's just a reflection of, I think, obviously some political elements to it, but the reality that more easing has to take place. And we talked about this dip of the steel, that as soon as it started to pop up, that was a whole new configuration of buy. We had a little bit of short increase, and that was enough to press it. Now, we still have the positive extreme. So we still have our target right back here from the low of what the retrace will be, just under the 34 when it does happen. We're not seeing anything from that standpoint just yet, but we do know at the sustained level that while it can last for a little bit, there will be a pullback. It'll just probably be very controlled, just like most of what we're seeing. I mean, again, NQ, likewise. And this still ties into exactly what I said how many months ago.
Order filled.
There we go, excitement there. And from a euro standpoint, again, we're right at the peak, still going to be holding on within these levels. There's no change from them holding that upper line. And that's, again, the status quo in the U.S. is maintaining it. Same thing here as we look at oil, just holding its own, and not even that, it's just being propped. And again, we really have to see some kind of change. We're starting to get rumblings of it. You're now seeing, rallies in Europe and that about people refusing to stay in the lockdown setups. You had the CDC release the mortality details, roughly of all the deaths, claiming that COVID only actually killed 9,000 of the people. Everything else was related side effects, which I can personally attest to. They are real. But again, when you're looking at an overall mortality rate that turned out not to be anywhere near what we earlier suspected, some of the measures at these particular days have really gone in excess. No question about that, and I think that's the pushback that you're starting to see people demanding to be able to do, and then you're getting politicians caught doing things outside of the bounds of it, and that is going to create some turmoil now. As turmoil grows, as we're looking at gold, you're going to see gold move right back up. As we talked about, we expected this to continue back up towards the highs and then to break out eventually here into a new realm, particularly as the monetary easing continues. So early on, we saw the pop-up in pre-market from the lows. Then we ended up with a soft period, filled in the positive extremes that had been established. And then we dipped below the red line and made new low on higher extremes, which we really like, and then got everything across the power mo, the yellow over magenta, the improved shakeout histogram, and it was a blue candle there. It was off to the races. And at that particular point, everything else that came in was off of no real cross to the downside until you hit this signal right here, which was still just off of a reset of the shakeout, and the extreme wasn't showing any real depth to it, and that's why it rebounded. Didn't really feel the need to do anything about that, and then that just led to just a continued slow uptick rise. So there really wasn't anything to do beyond that long, other than be long and, like me, adding into it and just taking a little bit of gains whenever you have some weakness setups within it. But that's clean. I mean, steel this far under, that usually creates a little bit of soft spots, but then it's just a matter of once it gets back above the negative 13.5, you get your breakout pop. So often when you have these dips, it's an opportunity to add into a setup, and that's usually a very effective way to approach those. As always, though, I will put up any relevant details on Skype chat, still migrating some of the algorithms into the smaller code factor that I created that really is improving their speed in that and will allow for much greater mobility. So, as always, trade well.